Good morning, everybody. It's Tuesday, November 26th, 5:27 a.m. Central Time. Grain markets are mixed to higher this morning. December corn futures unchanged at 424 and three quarters. January soybeans up 3.5 at 989 and a quarter. December Chicago wheat up 4.25 at 540. December Kansas City wheat up 6.5 at 553. December spring wheat is up 5 at 586. We've got some new tariff news. Let's start there.
So, Donald Trump is planning to impose additional tariffs to stem the flow of migrants and drugs. Trump intends to implement an additional 10% tariff on imported goods from China and a 25% tariff on imported goods from Mexico and Canada. The tariffs are meant to discourage the thousands of migrants flooding into the US from Mexico and Canada, bringing crime and drugs. The tariffs would be in addition to the previously planned tariffs of 60% on all imported goods from China and 20% on all imported goods from the rest of the globe. On his first day in office, Trump intends to sign an executive order to slap the tariffs on Mexico and Canada. The 25% tariff on all Canadian imports is expected to increase U.S. energy prices as Canada serves as the nation's largest external supplier of crude oil.
No surprise here. Tariff Man is doing tariff stuff. The last time I called him the Tariff Man, the viewers accused me of being a liberal. These
Yep.
accusations. I don't know why they would care who I voted for, or I don't care who you voted for, whatever. This is significant, of course, as we've discussed in the past, because China is the top buyer of U.S. soybeans and is pretty much year in and year out. The last time that Trump slapped tariffs on China was in 2018, and China retaliated by slapping a 25% tariff on imports of U.S. soybeans. And that tariff remains in place. What they do is they waive the tariff. China's been waiving the tariff on U.S. soybeans so that they continue to be imported. So they could very easily decide at any point in time, hey, we're going to reinstitute that 25% tariff. We're not going to waive it. And that would be bad for our export market in soybeans. Corn, he's talking tariffs on Mexico, everything from Mexico. And corn has been Mexico rather, has been the top buyer of U.S. corn this year, accounting for 41% of all U.S. export commitments. So a couple of things. We don't know how Mexico and China will retaliate this time around. And, Trump is he's the art of the deal guy, right? So he's making these big threats, but could there actually be some negotiation before the tariffs are implemented? That is what I think. That's probably what I think he hopes for. I think that's what a lot of us hope for. I mean, we don't want to see a big trade war that results in a loss of export business. We really don't. That's not what we need. So we hope that this is a lot of talk that results in some negotiation, but definitely some risk when it comes to exports. I think we'll see.
Recent rainfall across the high plains caused U.S. winter wheat conditions to surge last week. The crop was rated 55% good to excellent nationally through Sunday, compared to 49% the prior week and 45% on average. The crop rating was the best for the week since 2018. Since the end of October, the good to excellent rating has climbed 17%. Only 12% of the crop was rated poor to very poor, down substantially from 23% at the end of October. The crop was 97% planted through Sunday, compared to 94% last week and 98% on average.
So winter wheat ratings went from being the second worst of the last 10 years to now the second or third best of the last 10 years. I pulled this drought data, U.S. winter wheat areas experiencing drought D1 to D4. And in the course of 3 weeks, we went from 62% of U.S. winter wheat areas experiencing a drought down to 40. And that's a substantial decline. 40 is still a high number, but that's a substantial decline. The areas in particular that are of importance, you look at that dark green stuff in Kansas that's on my map here, that's a super high density winter wheat producing area. And there's just not nearly as much drought there as there had been. Some of your other dark green areas, like in the PNW, still some drought up there. You look at like southern Illinois into western Kentucky, places like that, SRW country, and there's not a lot of drought there either. So the situation has improved drastically, and the wheat market has acted poorly. It doesn't look good. That being said, there's not a much of a correlation at all between fall ratings and final yields. Like the ratings this time of year don't really mean a whole lot. But when you're in a market that's just lacking any sort of other news, this is just kind of like fodder for the trade. They trade this, but the ratings really don't matter this time of year, long story short.
Soybean planting in Brazil is nearing completion. According to well-followed private group Ag Rural, as of last Thursday, Brazilian farmers had planted 86% of the total expected soybean area. That's up from 80% the prior week. During the same week last year, 74% of the crop had been planted. Planting progress has been accelerated in recent weeks due to ideal planting conditions.
The forecast is favorable. There's below normal rainfall expected in parts of Mato Grosso over the next 10 days, and that you can push that out to about 16 days as well. I just don't know if that's enough to get the trade excited. It's still going to rain, make no mistake. I've got the same circle here on this map, which is just total expected rainfall. It's going to rain. It's just not as much as maybe it normally would. I don't know that that's cause for concern. The weather people that I follow are not concerned about this. The soybean market could be acting worse, though. It was able to hold those lows that were posted back in August, and we're a little bit higher this morning. A lot of people thought that beans would be at $9 by now, and we haven't done that, not yet at least.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
The new soybean seasonal. If you guys have marketed soybeans the same way year in and year out over the course of your career in farming, whether it's 10 years or 40 years, the seasonal tendencies in the soybean market have changed and quite drastically. And I discussed this yesterday and what it could mean for your grain marketing potentially. I think this is a must-watch video if you're a farmer and you've got soybeans, whether it's old crop beans, 24 beans, or you're thinking about 25. I think it's something that could be important here over the next couple of months. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. There's no upsell. There's no hidden fees, nothing like that. We just want to send you info for $50 a month. That's it. Takes about 30 seconds to sign up. You can do Cash App, Google Pay, Apple Pay, credit card, piece of cake. There's no login instructions. Everything's super easily accessible on your phone. It's one click to play the videos. Give that deal a shot this morning, guys.
The U.S. has halted Mexican cattle imports after the discovery of New World screwworm. The confirmed case was discovered in a cow in Chiapas, Mexico, near the Guatemalan border. Screwworm maggots infest warm-blooded animals, including humans, and cause severe infections. The announcement caused feeder cattle futures to surge to their highest level since July on Monday. Mexico is the largest source of U.S. cattle imports. During the first 9 months of this year, imports from Mexico reached 1.03 million head. That's a 21.3% increase from last year. It's anticipated that imports will likely be restricted for about the next month, greatly reducing the already limited supply of feeder cattle.
I think there was a shot that I did at Cam's in Champaign in 2003 called the Screwworm that they made me.
Oh, my goodness.
There you go. So the feeder cattle market rallied sharply on this yesterday, and it backed off. It didn't close on the highs, but it was a good performance. So, Mackenzie, your thought is that this is actually maybe a positive for the U.S. cattle producer?
Definitely. From a producer standpoint, we're always fighting imports of cattle and also beef. But I mean, you restrict all these cattle coming in from Mexico, we're going to see the fat feeder cattle market jump even higher. And hopefully that'll bring cash cattle along with it. And we're not against that by any means. And they're eventually going to get this straightened out and things will go back to normal. But for the time being, yeah, this is pretty good for producers.
Yeah, take the higher prices. Not that prices weren't high already, but this is additionally helpful, I suppose.
Yes. Coffee futures soared on Monday amid supply concerns. New York Arabica coffee futures climbed 3% to their highest level since 1997. Robusta coffee futures recently surged to their highest level since the 1970s. This year's rise in coffee prices is due to concerns over reduced supplies in Vietnam and Brazil. Despite substantial rainfall in October, Brazil's hot and dry weather earlier this year damaged coffee trees, which is expected to impact next season's coffee production. Additionally, the USDA is projecting Brazil's coffee stockpiles to drop to 1.2 million bags by the end of this season in June, a decline of 26% compared to last season.
We don't really talk about the New York markets very much here or at all, but this stuff is pretty interesting. So iced coffee, and no, it's not the iced coffee your wife drinks. It's ice is the exchange and coffee is the commodity that is traded there. We're almost at all-time highs. I think that 1997 high was the all-time high. You look at the cocoa market, which is another New York traded commodity, and it's been very, very strong. You look at frozen concentrated orange juice, another New York commodity, very, very strong. I wish that some of the positive New York attitudes would make their way west to Chicago and help out our corn, soybean, and wheat markets. But we haven't seen that yet. Interesting stuff, though, that some of these sectors have acted incredibly well. It's just the stuff we track. It's not acted very well.
Financial markets reacted positively to Donald Trump's pick for U.S. Treasury Secretary. Scott Bessent, the founder of Key Square Group, is anticipated to advocate for a more gradual use of tariffs. He is also expected to reduce regulations in order to boost economic growth and work on reducing deficit spending. Currencies around the world rose on Monday in anticipation that Bessent would soften some of Trump's extreme economic policies. Bessent, like Trump, is a supporter of cryptocurrency. During his campaign, as we can all remember, Trump suggested creating a federal Bitcoin reserve, which has recently pushed Bitcoin to record highs.
I don't know if you're going to get a softer approach to tariffs because it's not what Trump said yesterday.
Right.
And I don't know how much influence the Treasury Secretary is really going to have over that. I mean, I think all of these cabinet appointments, they're going to have Trump's ear to some extent, but I think he's got his mind made up on tariffs. I think that's been a foregone conclusion for a long time. So I don't know. We'll see.
U.S. soybean shipments declined last week but remain above year-ago levels. USDA reported that 77 million bushels of soybeans were inspected for export during the week ending November 21st. The print was down 7.3% from the previous week but up 34% compared to the same week last year. Corn shipments were near the upper end of pre-report expectations at 36 million bushels. The print was up 3.4% compared to the previous week and up a whopping 115% versus the same week last year. Wheat shipments were also near the upper end of expectations at 13 million bushels. The print was up 83% from the previous week and up 25% versus the same period last year.
This is really great. I mean, corn shipments more than double the same week last year. Soybean shipments very strong at 2.1 million. Soybean shipments, I mean, in most years they've peaked by now. Usually like late October, early November is where you peak, but we're still doing very well. The river's back to normal in terms of water levels and that sort of thing. So we don't have much restriction here. This is about as good as you could ask for right now.
USDA reported a flash sale of corn on Monday. U.S. exporters sold 18 million bushels of corn to Mexico. Of the total, 14 million bushels are for delivery during the 24-25 marketing year, and the remaining 4 million bushels are for delivery during the 25-26 marketing year.
Mexico buying more corn. If you want to hear my crazy tinfoil hat theory about Mexico and China, go watch yesterday's video. But they've been buying a lot, and we've been shipping a lot to Mexico as well. What did cattle do yesterday? We talked about it a little bit.
Yep, they were higher. Live cattle, they were 50 cents lower to 25 cents higher, but feeder cattle, they saw gains ranging from 5 cents higher to $1.22 higher. Box beef was higher yesterday. Choice ended the day at 309.71. That was up 2.30, and select ended the day at 273.74. That was up $1.67.
Couple of notes. Friday is first notice day for December grain futures. If you have any positions there, make sure you take a look. The markets, of course, are closed on Thursday for Thanksgiving. We've got a normal close tomorrow. We're going to reopen following Thanksgiving at 8:30 a.m. Central Time on Friday, and then we only trade till 12:05, I believe. We're going to be off on Friday. No videos or anything from us. We're taking a day off. We'll be back Monday after tomorrow. Outside markets, U.S. dollars about flat. Stocks are up just a little bit. Gold's up $13. Crude oil is up 72 cents in the January WTI at 69.66. Have a great day, guys. We'll be back on Wednesday.